Hello viewers, in this video I'll be going over silver. Today we are up 53 basis points and we have about 4 hours left in trading. On the 1 hour chart we start to see a convergence shaping on the 1 hour MACD. As for the 4 hour chart, if we zoom in we are dipping into negative MACD. So as for the daily chart, we are slowly resting on support where we left off back in November 12th. So I do see that as our next possible support if we do manage to reverse. So that is around the price of around $16.60, and that price coincides with past resistance back in July or late July. Since we are above resistance, that act as our support. And as for resistance, we failed to break above the 50-day moving average and the 100-day moving average. So I do see that as our immediate resistance, which is at $17.40. We failed to break it yesterday around that price. So that is our immediate resistance. So if we were to move on higher, that price movement is roughly around, I would say, 2.4% to the upside, and to the downside it is around 2.4 as well. So the forecast model is now available in the link below, so do check it out for our silver. If you configure these settings, and you can examine all the models that I do not go over in the video, and do check it out. Again, it's in the link below. So back to the forecast model, I'll go day by day where silver will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to May 26th to August 4th, 2010. So let me point out why these two charts are similar. So what we have here in the beginning of the current trend, we start off touching the bottom Bollinger Band, and we have one instance there and the second one right towards the middle, and in between those two we see it touch the upper Bollinger Band, and after touching upper Bollinger Band, we touch the bottom Bollinger Band once more, and we see it revert back to the mean right towards the end, or touching the middle Bollinger Band. And we have those points there. So back in the trend in question, we start to see a similar pattern as well. We see it revert back to the mean right at the end as two, and in the beginning we see it touch the bottom Bollinger Band, and the second one was here, and in between the instance where we touched the bottom Bollinger Band, we touched the upper Bollinger Band. So we have those points. We have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was May 6, 2010 to August 4th, 2010. Back then, silver was down roughly around 1.2%, so slightly to the downside. Overall, I may see possible sideways price action in the next coming days. So again, this forecast model is now in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.